You want to know what are the best stocks to buy now? Let's switch it up today. I'm going to share 10 stocks that are buys according to Fidelity. So these are the buys and sells from retail investors like us. So 10 stocks people are buying on Fidelity and one stock people are selling. Let's go. The first stock with 13,531 buy orders versus 10,509 sell orders is Tesla. Tesla has an A+ profitability grade on Seeking Alpha, but keep in mind, gross profit margins are important. Now, on the automobile side, the EV side, of course, that differentiator is going to be those profit margins from Ford and GM, those legacy makers. The primary reason that people own Tesla stock, of course, robo-taxis, as well as humanoid robots with Optimus. Now, this is where we start talking about quantitative versus qualitative analysis. But if you look at the growth, it's not spectacular. 6.91% projected forward revenue growth. And this last earnings report wasn't very good. A miss on the top and bottom lines, a revenue surprise missed by almost $2 billion. Now, on the valuation side, you have a 204 gap forward PE ratio. So again, if you're buying this stock, a lot of it is about thinking about the future. You're thinking about the speculative story, the qualitative story, not the quantitative story. It's sitting at a $1.05 trillion market cap, and you can see the stock is up 84.26% over the past year. However, year to date, Tesla is down about 19%. Looking at a chart at Tesla, our focus here in 2024, really from March to May, June time period, was 175 or less DCA with a preference of $150 or less DCA. Now you can see it's sitting right around this P 327. The R3 Fibonacci is up here at 425. I think there's a good chance you see 380 to 415, but it's very expensive. Again, it's about that qualitative story. This is a called stock. Whether you like it or not, it's a called stock. You can call it a meme stock, you can call it whatever you want, but the thing is it doesn't trade simply off fundamentals, and there's a lot of retail momentum behind a name like this. I own the stock, but my cost basis is much lower. I'm not buying it here. In fact, we were buying it back here, trimming, closer to $450, $500 range. Is Tesla stock a buy now? Well, it's really up to you, your portfolio and your blueprint. But right now, more Fidelity retail investors are buying than selling. This next one's pretty close. You have 11,800 buy orders versus 10,726 sell orders. Nvidia. Now, Nvidia has rock solid fundamentals, has been absolutely on fire the last few years. This was a must buy stock for any portfolio we announced on this channel in 2022. So hopefully you listened and made some money. Profitability, A+. Now, gross profit margins have come down from that 75% level, and that will impact Nvidia as we go into the future as competition starts to heat up. Growth, it's been absolutely on fire. Of course, that's slowing down some, but you still have 60% forward revenue growth. Now, valuation is going to show you an F on Seeking Alpha. Here's the thing, a 35 gap forward PE ratio, but that peg gap is 0.57. That means that this stock is growing into its valuation very quickly. It's hard to say it's expensive, especially if you look at other semiconductor names. Now, you guys know the story. I've been long on this stock since 2017, $3.95, but all you care about is where it's going next. Recently here in April, sold down to $86.62. So a drop from 153 to 86, back today at 144. I still believe this stock will break that 150 again. Once it gets past that 153 resistance, you'll probably see something between 165 and 175 the back half of this year, early 2026. Number 3, this next stock is interesting. It's a new position in my main portfolio. I started buying it in March and went heavier in April. So we have just over 6,000 buy orders, but we have 15,474 sell orders. The stock is Oracle, up 15% today off of earnings, really strong earnings, beat on the top and bottom lines. And really what that earnings report told me, if you listen to the earnings call, AI is alive and well. So Oracle is targeting over $67 billion and 70% cloud infrastructure growth in FY26. In addition to that, they're expanding their global data center footprint. And look at the RPO. This is the remaining performance obligations, $138 billion, up $8 billion from last quarter and 41% from last year. And I posted some of this in Discord, but Oracle beat expectations on insatiable cloud demand. And you're seeing price targets get pumped up to $240 a share. Now, keep in mind, guys, this stock in April was $118.86. So you saw this stock fall from $188 all the way down under 120 and now back to new highs over $200 today. And it makes sense that people are trimming, especially if they were buying it down here. This is a nice profit on a large company. This company's been around a long time, and so if you're selling at $200, it's probably not a bad trim area. Can it go higher? Sure. Am I bullish long term? Am I going to hold on to the stock? Sure. But I definitely would not be buying, so it makes sense to see more people on Fidelity trimming or selling versus buying. This next stock is in the news today for very sad reasons, unfortunately. With that said, we do have 11,651 buy orders versus 6,622 sell orders on Boeing. The stock was down quite a bit more in pre-market. I think I saw it down like 8-9%, currently down a little over 4%. Just being completely real with you guys, like I always am, I mean, this doesn't look great to me. Profitability F, we got negative gross profit margin. Of course, people are buying it because it's a turnaround type story. The growth on this, it is starting to improve. So negative growth to a forward 7.8%. Of course, news like what we saw today. This company has had lots of problems over the past 5 years or so. It seems like there are too many headlines in the news about Boeing. This is not a stock that I own, nor would I recommend buying it personally. Of course, it was just 128. You could have made some money on it, but buying it here, it went up to 218. It's now 205. R3 up here at $230. This stock does not fit into my blueprint. The risk reward is simply not there, and it's not a stock for me, but more people on Fidelity are buying versus selling today. The next one's a little bit surprising to me because I would have assumed that most of the people buying this aren't buying it on Fidelity. Maybe they're buying on Robinhood. Hey, I'm not here to judge. 14,918 buy orders versus only 1,950 sell orders. Gamestop. Now, part of the reason for that is because it's down 23.91%. So retail oftentimes is going to buy stuff when they think it's on sale, when they think it's down. Now, be careful with this. Profitability, B minus. Growth, negative 15% growth. This is not a growth stock. This is a company that's slowly dying. Whether you want me to say it or not, it's a meme stock. You want to get mad, that's fine. It is what it is. That's what it is. It's a meme stock. And if you're buying this, it's speculation. Short interest, 11%. I'm not here to hate. I don't short stocks. I hope you make money on it. This is not something I personally would buy for my portfolio. From a chart wise, you can see this R3 Fibonacci around $20.28. Certainly can go lower. I mean, this was $9, pops up here. It's all over the place. I mean, look at this chart. It's been an absolute roller coaster. If you go back to 2021, this thing was way up here at $120 a share. So lots of bag holders in this stock. Lots of trading momentum. Of course, some retail investors are trading on Fidelity. Those are the numbers, though. According to Fidelity, more retail investors on Fidelity are buying GameStop versus selling. Up next, you got an ETF, and it makes sense you see more buying than selling because people are probably dollar cost averaging, periodic dollar cost averaging into this, trying to long-term invest. Vanguard S&P 500 Index, the VOO, 14,865 buy orders, only 1,210 sell orders. Now, I've got the S&P 500 Index up here just to give you an idea of where we could go. Right now, you're seeing 6,039. The bias remains bullish with a 6,050 and then a 6,150 in extension. This R3 is 6209.61. The previous highs on the S&P 500, 61.47. So we're lingering about 100 points under that right now. The next one has 8,765 buy orders versus 2,642 sell orders. Apple. Now, of course, Apple has been under a lot of scrutiny. First and foremost, tariffs are a major impact to a company like Apple. So the Chinese uncertainty, as well as other countries like Vietnam and India, but also a lot of people just feel that Apple has lost its innovative edge. Now, with that said, it is a very profitable company, A+. You can see some strong numbers here in Seeking Alpha. The growth, this is more of a dividend stock at this point, a DGI type stock. Doesn't have a lot of growth. We're only showing 4% forward revenue growth. And the problem with that, even though it is a dividend stock with 12 years of dividend growth, a very low payout ratio at 14%, that dividend yield is only at 0.52%. So it's not really a growth stock. It's not really a great dividend stock. And then to top it off, the valuation is a 27.7 forward PE ratio. Now, even though I am an Apple fan, I've been long the stock for over a decade, I do believe that Apple has really dropped the ball when it comes to artificial artificial intelligence. If you look at what Siri can do right now compared to Grok and other AI chatbots, it's an absolute joke. So you're sitting at a $2.97 trillion market cap. Of course, it has a rock solid balance sheet, but it's down 6.32% over the past year. Year to date, down 20%. So Apple stock is in a bear market right now. Is it a buy right now? It was just a $260 stock here in January of 2025. So we dropped from 260 all the way down to 169 on tariff news. We did have a nice bounce up, but we've lost steam and we're now under $200 a share again. This S3 is 181, and I honestly think the stock is still a little expensive at $200 a share. It is a high quality company. I don't think it's going anywhere. The question you have to ask yourself is, where does it fit in my blueprint? Is it a growth stock, dividend stock? Why do I want to own it? Next is a Fire to Wealth favorite since $9.50. The community's made a lot of money on this stock. 6,953 buy orders versus only 3,680 sell orders. Palantir. Now, Palantir has rock solid profit margins, 80%. This is a SaaS, software as a service company. The growth has been very solid as well, 33%. You can see 31% forward revenue growth. Valuation gets tricky, and this is where you typically want to look at those cloud SaaS metrics. Now, the EV/NCM revenue for something like this is pushing like an 80. And if you want to look at a PE ratio, you certainly can because it is profitable. But this PE gap forward is a 404.61. So this is not for the faint of heart. It's very expensive where it's at. Very much a retail name, very popular with the retail community. This stock is up 472% in the past year. It's now sitting at a $321 billion market cap. And that starts to get a little bit tricky because you look at the most recent quarterly revenue, $883 million. You're talking about a very expensive market cap. That puts you at a forward price to sales of 82.62. Could the stock go higher? Of course it could. In fact, this Fibonacci R3 is $151.70. And if the market stays bullish, you probably see $150 plus on Palantir. Now, our Discord community bought the stock way back here on day one of the direct listing, all the way in October of 2020. And of course, it ripped up to 45. And we might have trimmed some along the way, but we were really adding this whole time with lots of conviction. Eventually, the stock took off. So of course, we've been trimming at these higher prices. We've made a lot of money on the stock. It is still a core holding in my portfolio, my primary portfolio. It's in the top 10. Would I be a buyer at Palantir at $136 a share? Not me personally, because I like to buy stocks before the masses do. Another interesting one here. This is 5,521 buy orders versus 3,818 sell orders. This is Coreweave. Now, this is a fairly new IPO, so you're not going to have a lot of data here. But you look at the profitability and the growth numbers. I mean, it's interesting, right? It's very interesting. You know the story with this, Nvidia's relationship with Coreweave. We are sitting at a forward price to sales ratio of 14.23. A $71.85 billion market cap, has about 4% short interest. And you can see this went public here in March 2025, around $40, sitting at $150 today. So we don't have enough data for any technical analysis here, but you can see it actually dropped down to 33.52, and it's been on a parabolic tear since then. Now, there actually is an R3 on here. I wouldn't give it much merit, but $182 a share. I personally am never a buyer of a stock that looks like this. I just can't do it. The next one has 5,393 buys versus 2,632 sells. Quantum computing. Important to note, not profitable with a D profitability grade on Seeking Alpha. And check this out, guys. We're talking net income per employee, 12 months trailing, burning $980,000 per employee, almost $1 million per employee over the last 12 months. Yes, it has nice growth, but at what cost? The valuation, of course, not profitable. Look at the price to sales ratio, 5,345.8. 5,345.8. I've been investing almost 30 years. I don't think I've ever seen this before. In the past year, this is up 2,713%. It has 18.61% short interest and a $2.67 billion market cap on how much revenue? $39,000 in revenue. This company is literally burning cash and is not making any money, not even close to profitability, and the valuation is out of the stratosphere. This was literally 35 cents about a year ago in July of 2024, and it ripped from 35 cents to $27.15. Fell off a cliff back to 4. This thing's all over the place. It's past the R3 here, and it just pulled back recently now to $18.12. So massive volatility, very much a trader or momentum type name. Be very careful. right, next I got a 2-for-1 rapid fire. But if you're new here and videos like this are helpful, make sure you subscribe to the channel, click that bell for notifications, and return the favor. Drop me a like, and drop me a comment. So up next is another ETF. This has 7,434 buys versus only 575 sells. Again, you're trying to accumulate wealth. You're dollar cost averaging. This is SCHD. This is the backbone of my dividend portfolio. And the last one has 5,014 buys, 2,756 sells. OKLO. The ticker is OKLO. Thanks for watching, guys. I appreciate your time and attention. Have a great rest of your day. Take care.